Musing world affairs can be fun and interesting. As such, one big idea comes to mind, at least for our chief equity strategist and economist, John Blank. He's here now to kind of elaborate for us. John, you say that big idea centers on whether chaos politics is affecting or being affected by slow real GDP growth. Which is it?
It's neither, Terry. I mean, the truth is, there is a relationship between economic variables and this chaos politics or uncertainty, but you don't see it in places like Japan. In fact, you see in Japan, Abe is the second longest serving prime minister in Japanese history and the longest serving prime minister since World War II. So what you learn is it's really about something else. And frankly, looking at Brexit and looking at the issues that are with the border in the United States and trade, a lot of it's immigration and some kind of rising nationalism in certain parts of the world. Immigration seems to trigger it, and that's probably the right linkage. But again, it's a more complex link. There's certainly a linkage to economic variables and chaos politics, but it's not top-line growth per se that gets you there. It's a more extended linkage. Then you end up there in some places.
Speaking of Brexit, you have some interesting thoughts on the current relationship between the UK and United States. Does this have to do with politics also?
Yeah, I mean, you got to understand that within Brexit, we've seen a broken conservative right side of the politics, which is the Conservative Party, and the Brexit Party are now two groups. And on the other side, you have the Liberal Democrats getting so much more strength, and they are taking it away from the Labour Party and Jeremy Corbyn. So in 3 years ago, there used to be two groups in England, Labour and Conservatives, that ran for control of the House of Commons and therefore the country. Now you've got a lot of jockeying amongst at least four parties and probably more, given the role of Northern Ireland and Scotland and even the Greens in playing out a much tighter scenario. So this is the story that from England that plays out in the United States. It's very likely that the Republican Party has those that agree to the impeachment of the president, those that don't, and those that are on the left side that go with a more centrist persons like a Biden versus those that look for more activism like a Sanders or a Warren. So these are mirror images of one another, Terry, and that's what I want to point out.
How does all of this then matter to stock owners?
Well, here's the thing. What it matters to, and you've seen it with the big shorting of the HMO stocks, is in the United States terms, people are very concerned that a Medicare single-payer outfit will emerge if a more activist Democratic presidential candidate is put to place. On the other side of the coin is the impeachment or not? If the impeachment happens, stocks can rally if they think the trade war will end with the president's exit. And the president's exit can come earlier than November or January of 2021. But this is the other thing that we're looking at. Markets are forward-looking, and they are pricing in these scenarios. And it's a very dynamic environment. And so, again, it's not the slowing growth that's the thing I want people to focus on. Certainly there is certainly a cause of all this, but it's these internals that are more relevant for stock investors.
So it seems then that the bottom line is that global policy uncertainty is at a historic high, not likely to abate anytime soon. Is that accurate?
Yes, that's simply the case. It's accurate. There's going to be more of this because the sources of it are consistent with particularly the U.S. president and his role in this. And as long as he's there, it continues.
While it's earnings season here in the United States, the European Q3 earnings season has also gotten moving. So what's your take on both?
Right now, I think it's pretty much in line with my expectations. I think the real thing I'm looking at in the United States is the 2020 outlook for revenue growth still seems twice what it should be. And I'm waiting for the analysts to start cutting that back and giving us a more realistic view of 2020. That's really what I think people should be focused on is the outlooks that are coming out of these reports. Because a lot of the weaknesses that we're hearing from, everybody priced it in already.
And the stocks you're watching include Taiwan Semi, Target Corp, and D.R. Horton.
Yeah, let's talk Taiwan Semi. This stock has been on a big roll since early August. It went up from $40 to $50. I've got it right now, though, with a forward P of 23. This is the story. The semiconductor chips all use this as fabrication operation in Taiwan. That's why it's called Taiwan 70. It's a $260 billion market cap stock. The number one pick right now. Everybody's calling a bottom in, but you got to wonder when the stock's already gone up $10 a share from 40 to 50. It's all priced in. So here's something to watch for within our Zacks ranking, which is people are really thinking something's going to happen here, and maybe it already has in terms of the share price.
And Target?
Target Corporation, TGT. Target is doing well. I mean, the thing that people are not getting right is you can't throw the baby out with the bathwater on retail. There are names like Target that have figured this out, and they're frankly doing it because they are penetrating the internet. Target has a good internet business, and they're making the transition.
And D.R. Horton, that's a home builder.
Right, DHI, ticker DHI. These home builders, actually, we're getting news this morning about, this is Friday or Thursday, and we're getting news that, there is an uptick in home production, and the prices are really strong here. So these guys are making money, and the home builders are probably have a little more room to run. If you like a momentum stock short term, you got to like D.R. Horton.
Chief equity strategist and economist John Blank musing with me on world affairs and global markets. With John, I'm Terry Ruffalo. Here's something that we also want you to know about. For a limited time, you're invited to follow Market Insights, buys and sells from all our recommendation portfolios at Zacks in real time, and it only costs $1. You can even look in services that are so exclusive they've been closed to new investors, and all you need to do that is visit Zacks.com/promo, PROMO, for details.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.